Hey guys, welcome back to Smart Wallet and Me, where financial wisdom matters. In today's video, I'm going to give you my top 3 penny stocks that you should be putting on your watch list because they may be making some big moves in the coming weeks or months. So here we go. Let's get right into it. Okay guys, so my first pick is Modus GI Holdings. Modus has been on the move recently. In fact, since the beginning of November, shares of MOT stock have jumped as much as 71% after hitting highs of $1.25 this week. The company provides endoscopy solutions to diagnose and manage gastrointestinal conditions. After a few quarters of bearishness, quarter 3 looks like it revealed some renewed momentum. In fact, Tim Moran, Chief Executive Officer of Modus GI, pointed out that during quarter 3, we saw these hospitals have ramped up inpatient colonoscopy volumes to approximately 80 to 90% of pre-pandemic levels. Moving forward, we believe we can start to achieve sustainable procedure volumes at target accounts, and we expect to see a continuation of our progress and momentum into the fourth quarter. That's very good news for this company because after the COVID hit, everything shut down. They were not able to do any elective kind of surgeries. Now that the economy has opened up a little bit, the patients are able to do these kinds of elective surgeries once more, and they have reached about 80 to 90% of pre-pandemic levels, which is good news. And with the new vaccines out for the coronavirus, it may be a good catalyst for the economy to open up again, leading this company to go back up again and make some very, very big highs. In light of this, the market has rallied behind the penny stock. This week, that rally has continued as Modus announced approval from DECRA, EU notified body, for enhancements to its PureView GEN2 system. They said that these enhancements were introduced to commercial customers in the US during the fourth quarter of 2020. It comes shortly after Modus announced that the US Patent and Trademark Office and the European Patent Office issued 2 new patents to further protect PureView in these markets. Okay guys, according to TipRanks, based on 3 analysts offering 12-month price targets for Modus GI Holdings in the last 3 months, the average price is $2.33 with a high forecast of $2.75 and a low forecast of $2. The average price target represents a 106.19% increase from the last price of $1.13. So let's take a look at the chart here. The chart shows us that the price is at $1.13, and it looks like we have hit that resistance of $1.20 that we hit on December 11. And it looks like that's going to be our new resistance that we need to pass before we can get higher from here. The RSI is at 61, the MACD is at around 0.2, and the stochastic shows at 44. So guys, I would like to see the stock to go down, maybe test the $1 range, and then go right back up from here before I can be comfortable to make any bets on this. But it looks like it has made those highs. It's very close to that $1.20, and once it passes that $1.20, then it would be a good opportunity to ride it out and see where it would lead. And guys, just as a reminder, this is only for entertainment purposes only. I'm not a financial advisor. I'm not going to be advising you to make any purchases or not to make any purchases. Penny stocks are always very volatile. You can make a lot of money and you can also lose a lot of money with these. You need to be very on top of things whenever you're trading penny stocks because they can make 100, 200% moves in one trading day. So you always have to be on the lookout to make sure you're watching your stock for that particular day that you're holding them. So you need to be watching your stocks every single day if you're holding penny stocks because you want to make sure that there's not big drops in your stock price. And if there is a big rise in your stock price and you want to take some profit off, that would be a good time to do so. Okay guys, my next stock right here is Conformis Inc. The past 30 days have seen shares of CFMS shoot up over 60%, which is quite substantial. Conformis Inc. operates as a specialty biotech business. It designs and manufactures a large range of products that help those who have had joint replacements. This includes iTotal PS, a replacement ligament system, as well as iUni, a full knee replacement product. While this is a specialty market, the demand for these products seems to be enough to support a healthy balance sheet. Last week, Conformis Inc. announced that it would be reporting its fourth quarter results as well as its full 2020 financial results in the beginning of March. Ahead of this, let's take a look at its quarter 3 2020 financial results. In the third quarter, which ended on September 30th, CFMS announced revenue of $16 million. While this is a decrease of around 7% year over year, this makes sense given the effects of the pandemic. Mark Augusti, CEO of Conformis, stated that we were pleased to see a continued resumption of elective primary joint replacement surgery during the third quarter. Given the challenges of managing through the pandemic, I am particularly pleased to see gross margin improvement over last year. The hopes are that this type of surgery will begin to resume as the pandemic lessens in severity with vaccine distribution. With quarter 4 earnings coming in March, will CFMS be on your list of penny stocks to watch? According to Tip Ranks, based on 2 analysts offering 12-month price targets of Conformis in the last 3 months, they have a price target of $2.50, while with a high forecast of $3 and a low forecast of $2. The average price target represents a 104.92% increase from the last price of $1.22. Now, taking a look at their stock chart here, you can see in December of last year, this stock was trading at around 66 cents, and then it took a big run up after the New Year's. It went up to 80 cents and it doubled to about $1.22 where we are right now. And the RSI is at overbought levels at 83, and the MACD is around 0.07, the money flow is at 88, and the stochastics is at 70, which shows that this is a little bit overbought currently. I would want to wait and see a return to its 50-day moving average before I can feel comfortable enough to make any purchases. But you never know with penny stocks. Penny stocks are driven by demand and based on hype. So you got to take that into consideration when you invest in penny stocks. They can go up in one day and come back down in one day as well. So given the fact that this has gone up from oversold levels to overbought levels, I would like to wait and see some kind of pullback before I would feel comfortable to make a purchase here. Given the fact that this stock has almost doubled from 60 cents to all the way $1.22, I would like to see the RSI to move down to about the 40 to 50 range before I would feel comfortable to get in on this stock. Okay guys, so my last penny stock pick for today is Sorrento Therapeutics. So in summary, it is a clinical stage biopharmaceutical company that develops treatments for cancers, pain, and coronavirus. With such a relevant developmental pipeline, it is clear as to why investors have been flocking to SRNE stock. Impressively, it is looking at gains of over 120% in the past year. Just last Friday, SRNE stock jumped by over 18%. This coincided with a price target estimate from H.C. Wainwright early that day. Wainwright analyst Ram Selvaraju projected a price target of about $30 for SRNE stock. This suggests a 215% upside from its price of $9.50 at last week's closing bell. Moreover, Selvaraju also estimates that the company will be obtaining $320 million from its current investments. He cites Sorrento's investments in biotech companies Cellularity and NantWest. First, the former will be merging with GX Acquisition Corp to go public. This would entitle Sorrento to about $200 million in shares. The rest of the sum would come from NantWest, who recently saw its share prices rise. This is thanks to positive trial data and its pancreatic cancer treatment. Selvaraju also points out that Sorrento's burgeoning portfolio of assets spanning 3 distinct therapeutic areas is another reason for the upgrade. Naturally, investors would be inclined to watch SRNE stock after such high praise. Another point to consider would be the company's solid financials. In its recent quarter fiscal, the company saw year-over-year jumps of 103% in total revenue and 116% in cash on hand. Its recent FDA application for its coronavirus test kit sets up exciting times ahead for SRNE stock. Okay guys, so based on 2 analysts offering a 12-month price target for Sorrento Therapeutics in the last 3 months, the average price target is $25.50 with a high forecast of $30 and a low forecast of $21. The average price target represents a 168.42% increase from the last price of $9.50. Now taking a look at the stock chart here, we could see that the price had a resistance of $8.65 and it just passed that level really well right here over the last week. It tried to break that up again on December 9 and then it hit it again on December 23rd, and just last week it passed that resistance level and now it hit $9.50. But we can see here that it is at overbought levels with 82 on the RSI and the MACD is at 0.3. The money flow is at 94 and the stochastics is at 94, which shows that these are at overbought levels. I would like to wait and see if there's another pullback to around the $8.60 range for this stock before I would feel comfortable to make any purchases on them. So guys, these are my 3 picks that I have for today. Let me know what you guys think, if you guys are bullish on these stocks, if you guys are holding any of these stocks, and what your decisions are in the future for these 3 stocks that I just showed you. Alright guys, let me know what you think. I would love to hear from you. Leave your comments down below. Give me a like, subscribe to my channel if you haven't already done so. I appreciate all of you. Thanks for watching and I'll see you guys in my next video.